Welcome. In this video, Zbcn co-wine this video. The downward trend has broken. Has the attack started? We will analyze it. Don't forget to subscribe and like, and please watch to the end to understand. Looking at the recent price action on the chart, one of the key structures that stands out is that the long-standing downward trend line is no longer valid. Over a period of time, the price had produced lower highs and lower lows based on this downtrend structure, making it clear that the market was under selling pressure in general. However, at this point, this bearish trend has been replaced by a strong upward breakout. The price has managed to break through this falling trend line, which has worked as resistance many times before, not by force, but in a very decisive and voluminous way, indicating that a new page has been opened regarding the direction of the market. Such hard breakouts usually mean a trend reversal in technical analysis. This is because a strong break below a certain resistance line for a long period of time indicates that the buying side is back in control and sellers are no longer as strong as before. This breakout is not just the crossing of a line, but also a sign of a change in market perception. Such breakouts, especially when accompanied by an increase in volume, produce much more reliable signals. In the current situation, the price exhibits a classic technical behavior right after this breakout, a retest. That is, this falling trend line, which previously worked as resistance, is now being tested to see if it can work as support. This technical behavior is quite natural and even expected by the market. Because after a breakout, investors instinctively gain confidence when the price returns to this area and gets confirmation. If this retest is successful and the price manages to hold here, a new bullish wave is usually inevitable. On the other hand, such retests can sometimes mislead traders. Especially in the case of reversals after fake breakouts, the price may fall back below this trend line. However, in the current scenario, since the breakout was quite clear, voluminous, and decisive, there are strong indications that this is the beginning of a real change of direction rather than a fake move. In addition, the fact that the price did not suddenly jump up after the breakout and thus return to the previous broken area in a controlled manner is an indication that the movement is healthy. Because instead of sudden and rapid rises, such structures create much more permanent trend changes. Another important technical element at this point is the breaking of the previous highs. If the price turns upwards again after this retest and starts to exceed the previous highs, this means both the confirmation of the uptrend and the psychological return of investors to the buying direction. Because in technical analysis, it is not enough for a line to break, the subsequent movement must stabilize. After this breakout, eyes are naturally turned to new target levels. From a technical perspective, after a breakout, the price usually aims to move up to the previous horizontal resistance levels. These targets may vary depending on the size of the pattern. For example, an upside move may be expected by the difference between the price's last bottom in the downtrend and the breakout point. This is an important measure for traders to use when determining position size and risk-return ratio. It should be noted that such technical breakouts are important signals not only for daily or short-term positions, but also for medium and long-term trend structure changes. Because the longer a downtrend line has been in place, the more meaningful its breakout becomes. When a long-term downtrend is broken, it is possible to say that the market has changed direction in a macro sense, and a new bull market is likely to begin. As a result, this downtrend structure that has kept price action under pressure for so long now appears to have been overcome. After a strong move past this resistance, the price is now retesting this area that previously worked as resistance. But we can't decide the analysis only by trends. Let's look at other metrics. Stay tuned. Careful study of the chart reveals that price is now in a phase that is considered very critical and often the strongest under the Elliott wave theory, the third wave. According to Elliott's wave principle, market movements follow a certain natural rhythm. This rhythm consists of a 5-wave impulse structure followed by a 3-wave correction structure. In the current situation, it seems that the price structure in the market has successfully completed the second wave of correction and has now entered the third wave of upward impulse. This wave is generally known as the longest, fastest, and most voluminous. One of the basic principles of Elliott theory is that the third wave should never be the shortest wave. Therefore, at this stage, the forward movement of the price is expected to reach certain ratios, not only aesthetically, but also mathematically. With Fibonacci analysis, it is possible to measure the potential levels to which these waves can extend. The third wave is often at least 18 times the length of the first wave. This is Fibonacci's golden ratio and represents the rhythm of market psychology. In stronger trends, this ratio can expand to 272 and even 618 in some rare cases. In the current situation, the price action has clearly started a strong upside breakout after the end of the second wave. This suggests that the third wave is actively working and the target levels may not yet be fully reached. If the price is indeed expected to reach the ideal size compared to the first wave, then the 618 Fibonacci extension level is the first target, and the 2272 level is the broader target. These levels are not only numbers, but also psychological barriers that subconsciously guide investors' buying or selling behavior. Even if there are corrections in the market during the third wave reaching Fibonacci targets, These corrections are usually limited and are usually followed by new highs. Especially in this process, investors should be careful not to close below the low of the second wave, because if this level is crossed, the third wave is structurally broken and the pattern becomes invalid. However, in the current situation, the price continues its uptrend by making a strong reversal from the second wave, which is one of the most important evidence that the pattern is working properly. If the third wave is indeed going to go all the way to the 1,618 or 272 Fibonacci extension levels, these points can be considered as profit-taking zones for traders. However, what needs to be considered here is how the price reacts after reaching these levels. If volume is decreasing, candlestick patterns are starting to weaken, or negative mismatches are seen, this could be an early signal that the third wave is coming to an end. Patterns also become very important during this period. Continuation patterns, such as flags, pennants, ascending triangles, etc., are common in the third wave, and an upside breakout of these structures usually contributes to the widening of the wavelength. Although the price often makes small corrections during this period, the overall direction remains up, and each correction is a preparation for the next rise. Another important point is the impact of the third wave on investor psychology. At this stage, investors become more confident, there is more positive news on social media and in the news, and many are more inclined to take positions in order not to miss the train. This creates a cycle that feeds volume and price further. However, it is important to remember that this uptrend is not an eternity. Therefore, technical calculation of target levels for positions taken in the third wave is extremely important for risk management. In summary, the current technical structure shows that the price is currently in the third Elliott wave, and this wave has not yet reached the target levels. As a first impression, the 1,618 Fibonacci extension level should be in focus. If this level is exceeded, 272 levels can be considered as potential targets. Decisions should be made by analyzing how these targets work on the chart and how they have reacted in the past. Digging deeper into the market structure and taking a closer look at the technical indicators, one can see that the RSI indicator in particular has been exhibiting a remarkable trend. The upward trend line that has recently been evident in this indicator plays a critical role in analyzing the momentum of price movements. The behavior of the RSI in line with this trend provides traders with valuable clues in predicting future price direction. In particular, this bullish pattern is important as it indicates that certain lows are forming at higher levels and that buyers are gradually gaining strength. In the current technical outlook, the RSI is about to reapproach a support line that it has tested and reacted upwards several times before. This support line is a rising trend line on the RSI that has formed over time. This line represents the start of momentum rebounds that have previously caused price to turn upwards. Therefore, if the RSI approaches this level again, it could signal a potential reversal. Such structures are not only a retrospective observation in technical analysis, but also a forward-looking strategizing tool. The presence of an uptrend in the RSI indicator suggests that the market is starting to develop resistance to waves of selling, meaning that every decline is no longer as deep as before, indicating that buyers are gaining strength. This is because the RSI makes higher lows on each pullback, indicating that the demand side of the market has become significantly more active. This pattern is classically considered an indicator of positive market behavior. In the current situation, the RSI moving towards the rising trend line is a technical development that can have a direct impact on the price. This is because RSI is a leading indicator that usually signals before the price. In this context, the RSI's contact with this rising trend line could also mean that the price has touched a technical support level or is in a consolidation phase. This contact often creates a reaction zone for the price and opens up the possibility of the start of a new wave of buying. RSI should not break this trend. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.